Hello, I am the Stock Options Hero, and from here on out, I'm going to share with you stock options secrets that only the most successful option traders know. In my videos, you are going to see my secret options trading system that only a handful of people know. And as I'm sure you're well aware of by now, options trading can be very lucrative. However, most options traders are not consistently successful, or even worse, lose money trading stock options. Trading stock options can be a high probability trade if done properly. Let me show you. Now, each day I will record a video where I play simulated options trades. So subscribe to my channel and watch my videos daily to learn how you too can be a successful stock options trader. Disclaimer: these videos are for educational and entertainment purposes only and does not constitute a recommendation to buy or sell any securities or stock options. Before I dive into today's stock options video, I have a small favor to ask. If you like this video or any of my videos, please subscribe to my channel and hit the bell icon so you will see my videos as soon as they are posted. This way, you won't miss out on any paper trading ideas. Tell me in the comments section which option trades you are looking at paper trading, and if you're lucky, I might do analysis on a ticker symbol from the comments section. All right, let's leap into today's video.
Welcome to another exciting episode of Zero DTE Option Trading Strategies, brought to you by me, the Stock Options Hero. Oh yeah, let's leap into it. Alright, so today was a very, very interesting day, and let me tell you why. I broke some rules. So, we have trading rules for a very, very, very specific reason. And once you have developed those reasons, there's a very good reason why you have developed them and wrote them down, and you should obey them. Okay? So, I violated one of my big rules. I missed this entry here. Had I logged in near the open, I probably could have got in around here on this candle and wrote a bull put spread. Probably would have done around like a 43.30, 43.25-ish bull put spread. And then when I got up to around here, I'm like, oh, yeah, there's no way it can keep running up. So I felt pretty comfortable doing or was it down here? Probably down here. Sorry, I should highlight where I get in. So I did a bear call spread right here, and then again right here. And these are the short strikes, right? So I did a 43.65 short strike, and then also a 43.75. And it kept running. And I'm like, oh no, this is not good. Not good at all. And had I been patient, I would have got an entry right here, but by then, there wouldn't be much value in the zero DTE option spread, right? So I was running out of time. Excuse me. I was running out of time, and in hindsight, probably right around here would have been the best place to do a bear call spread, because you got a pretty good bearish engulfing, MACD cross to the downside, stochastic cross to the downside after a pretty substantial run-up intraday, right? So basically that's what I did. Right around here, I wrote the 43.85, 43.90 bear call spread. And by then, I was a little annoyed, let's say. So I aggressively sold 20. I'm like, there's really little to no chance that it's going to go above 43.85 after running up this much. I was fairly confident in that there's going to be a sell-off near the close, and sure enough, there was. Now, I do not advise or recommend doing something like this, but I felt pretty confident. Now, if this were real money, I probably would have just done 10 contracts, but being a simulated environment, my rules were eased a little bit, shall we say. So I sold 20 contracts for the 43.85 and the 43.90, the June 27 expiration. So everything said and done, I made like $17.50 on the trade before commissions. So that's nice. And then these other two spreads, I ended up rolling for tomorrow. Now, we had a pretty big up day, and I'm hoping that tomorrow will kind of be like June 23rd after a rally. So oftentimes when we have a very big up day like this, the next day we have a little bit of a sell-off. Like right here, sell-off, sell-off, sell-off. So now it could be another up day, right? Like here, in which case it's going to be a painful day tomorrow. So what I'm going to do is log in near the open, and hopefully we have a hard sell-off in the morning, in which case I will get out of my 2 bear call spreads I rolled, even if I can get out at breaking even or basically scratching the trade. So the big goal is not to lose money. Basically, that's why I rolled it, because I saw the writing on the wall at this point that SPX was on a tear today and wasn't losing steam. So I pretty much knew at this point that SPX more than likely was not going to close under the 43.65 price level or even the 43.75. So I rolled these out for tomorrow, and hopefully I will be able to get out tomorrow near the open. So I'll put in a limit order to get out at my break-even point. So basically, I will scratch that trade, and then I can look for the trade entries. So worst case, I'm going to be out my commissions, which is much better than taking a $4,000 loss per spread, right? So it's a little stressful. And in hindsight, I wished I had waited a little bit longer in the trading day. And, thinking back, I've been the most successful when I trade during the last 2 or 3 hours of the trading day, because by then you've got a majority of the price movement, and you can see where the extremes are for SPX. The problem with that is if you wait until the last 2 or 3 hours to trade, then you're only going to trade one side, right? You're not going to be able to do an iron condor at that point. So you'll be significantly reducing your potential gain, but you'll be significantly improving any potential return on that trade and increasing your probability of success, right? So in my mind, that trade-off would be worth it to have a higher probability of success by trading the last 2 or 3 hours of the day. So if you're new to trading this strategy, I would suggest you trade the last 3 hours of the session before the hard sell-off of the value of the option. So you'll see what I mean when you trade it enough that during the last hour or two, the 0 DTE option value just crashes to the floor. It's crazy. So you need to find the sweet spot of getting in when you have a lot of the price points behind you and you know where the extreme levels are, right? So like right here, we knew the floor is probably around 43.37 or so. And then up here, it looked like this might have been the ceiling. Then that failed. And right here, we have a support. Kept running. And then up here, we finally found the ceiling at around 43.80. And my short strike was 43.85. So it got a little close. I was a little nervous, but after the huge run-up, I felt confident that it was going to run out of steam. And then also, if you look at the last 5 days, SPX has not touched this top linear regression channel. So today was a very strong day and not expected. But I did say in yesterday's video, we were probably going to have an up day, and I should have listened to myself and just focused on bull put spreads today, especially looking at the open, right? So need to get my mind off of being bearish all the time and just interpret the chart as it is. That is key. If you can figure out how to do that, you'll be a much more successful and consistent trader. Okay, so that's it for today. Please like, share, subscribe, and most of all, happy trading.